Now, L&T Finance reported a decent set of numbers for the third quarter. Net interest income and the net profits rose 18% on a year-on-year basis. But on terms of credit costs, etc., there were niggles. Well, let's talk about this and what should we expect going forward. We have Sudipta Roy, Managing Director and CEO at L&T Finance. Sudipta, good morning. Good to have you with us here. Thanks very much for joining us. We've not, in last many quarters, whenever we've spoken, numbers have been numbers in terms of growth, etc., they've been good this time around as well. But this time, it's a little bit of focus on the credit cost front, right? So on a reported basis, I think they fell about 15 basis points, but they are at 2.8%, right? You had earlier guided that you're going to bring it down to 2.3 to 2.5% this year in FY26. So let's just begin there, if you'll allow it. Go on, Sudipta.
Yeah, hi, thanks, Prashant, and wish all of you in CNBC-TV18 a very happy new year. On the question of the credit costs, if you look at our credit cost trajectory, we have been pairing the credit cost with every quarter. We started at 3.8, went down to 3.43, then 2.98. And this I'm talking about the core credit cost. Now, there's a little bit of confusion on the trajectory of the credit cost because previous quarters, we have been using macroprudential provisions. So what was the reported number last quarter which was 2.49 in credit cost. Actually, the core credit cost was 2.98. Now, this year, this quarter, sequentially, the credit cost has come down from 2.98 to 2.83, but which includes a 23 crore of one-time provisions on certain amount of co-borrower linkages. Now, if I were to exclude that 23 crore of one-time provision, actually the core credit cost, the cost from core credit cost from business is about 2.74, which is about a 25 basis points reduction from what it was previous quarter. So obviously, the downward trajectory of the credit costs sort of remains unabated. And I know there is one data point which I would like to give is that on a QoQ basis, our slippages actually have come down by 200 crores. And you will see this manifesting in lower credit costs in the coming quarters. We remain committed to what we have said that, by Q4FY27, our credit costs will come between the 2 to 2.2% range. And I think because of our various credit initiatives, that particular credit cost of lowering credit cost trajectory will continue unabated.
2 to 2.3% by, Sudipta?
2 to 2.2% by Q4FY27. That is, which is the final sort of, see, we have been doing a lot of credit initiatives, right? And, our new AI credit engine is working. The microfinance business has improved significantly. Our collection efficiencies this quarter has hit 99.7% pan-India. You will see all this sort of coming and manifesting itself in lower credit cost over the next couple of quarters. Our final guidance obviously has been that in that we will try to get towards that 2 to 2.2% credit cost trajectory, which we will try to achieve by Q4FY27.
Okay, all right. Hi, sir. Good morning and good to see you, Ben. Give us a couple of details then. I recall in our last chat, we were talking about the gold portfolio. And if you remember correctly, you said by the next year, it goes to that ballpark of around 4,500, around 5,000 crores. Now, with the surge in gold, that space is clearly being eyed. So give us a couple of details. What is the LTV right now? What do you end this year with in terms of a gold portfolio? And by next year, do you want to upscale that earlier target?
You see, our gold business expansion remains quite strong. We are setting up almost one new branch every day. So we started the gold business with about 130 branches in the month of June. Currently, we have rolled out about 68 new branches. And by March 31st, we will have 200 new branches, bringing up our branch count to about 330. So roughly, what I can say is that our gold portfolio at the end of this quarter has been about 1,700 crores. We will probably cross 2,000 crores by the end of next quarter. Probably the number will come around between 2,000 to 2,200 crores at the end of this particular quarter. And obviously, the growth trajectory for next year will also remain strong. We will deploy anywhere between 300 to 350 branches next year as well. And the guidance on the gold AUMs at the end of next year remain the same, between 4.5 to 5,000 crores. And our LTV is currently at a shade lower than 70%, which we are very comfortable with. our sort of yields from the auctions that we have been getting have been having about 145% coverage. So we are very comfortable with the metrics of this business and the speed at which it's scaling up. And we will be focusing very strongly on this business, not only in this coming quarter, but also in the coming year.
Okay, all right. What about your return ratios? Because that was, something that the street was tracking very, very closely. The ROAs, you're guiding it, to move closer to around the 3% odd, mark 2.8% odd by next year. So tell us, by when do you hit this number? And also in the ROAs, I think it was early teens, right? Help us with the number for both these two parameters, ROAs and ROEs for the coming year.
So our guidance has always been that we'll try to, come to that 2.8 to 3% mark by Q4 FY27. And, this quarter it has been 2.37%. Overall, hopefully for the full year, we'll come closer to the 2.4% mark at the end of this particular year. And as sort of our sort of headline AUM start expanding, and as our leverage continuously improves, we will see an improvement in the ROEs as well. The ROEs actually have been inching up with every passing quarter with the improving leverage. And I do believe that the ROEs, as we hit that 2.3%, 2.8 to 3% ROA levels, our ROEs will come to that mid-teens between that, between the 13.5 to 14.5 levels by the end of Q4 FY27. That is what we sort of look at. And obviously the components of our ROA tree, which we have been continuously monitoring, as you can see, our costs have been pretty stable, this quarter, even with the sort of the one-time impact of the labor code, our costs have been more or less about that, 4.06% of total assets. And we have always guided that our credit cost plus our OPEX will remain at that. And over the next quarter, we will try to push it down from that 7% level to a 6.5% level. So obviously, and obviously the efficiencies that will come from that particular line will obviously add to the ROA line. So again, to summarize, we expect our ROAs to come in that corridor of 2.8 to 3% by Q4 FY27.
Sudipta, morning. This is Rima here. On retail growth, how much of the retail growth seen this quarter was an account of the festive boost? Because personal loans, you saw very strong growth there. And you had spoken about, I think, a retail growth AUM of 25%. For the full year? Are you on track to achieve it?
See, we had guided a growth between 20 to 25%. So I think we are on track to achieve it. So one of the couple of things, the microfinance business, which had been sluggish for the whole of last year, actually saw a very good growth this year. And with the sort of the near normalization of the collection efficiency in the microfinance business, we are seeing good momentum in that business as well. Our personal loans business continue to grow very strongly. Our sort of digital partnerships together with the big tech partnerships have been working very well. And we have been scaling that volumes in that business quite well as well. In terms of the growth in the two-wheeler business, which saw major growth this particular quarter, was primarily a one-off driven by the GST 2.0 reforms and the strong festive demand. However, what we see is that the demand, because of the rationalized two-wheeler as well as the tractor prices, the demand actually has now settled at a little higher level than what it was in Q2 and Q1. So we expect Q4 to be a strong quarter as well. Typically, Q4 is a strong quarter for BFSI. So we expect Q4 to be a strong quarter as well. And our gold business is also doing well in terms of the new additions of branches as well as the AUM build-up as well as disbursements. So I do expect that we will end up somewhere between that 20 to 25% growth number for the full year.
Okay, and one final question. NIMS plus fee income was at 10.41%. What number can we expect for Q4?
We'll try to maintain it at that particular point. Obviously, our focus is, improving our core yields as well as improving on our weighted average cost of borrowing has gone down by about 7 basis points this particular quarter. And obviously, our NIMS and fees also have expanded by about overall 18 basis points on a QOQ basis. So that is quite a bit of a jump driven primarily by weighted average cost of borrowing efficiency, as well as, the rise in lending yields as well. So we'll be happy if we are able to maintain it at that particular level. We have guided that we'll maintain our NIMs and fees between a corridor of 10 to 10.5, and obviously we will try to maintain with an upward bias towards 10.5.
Sudipta, we'll leave it there. Thank you very much for joining us. Always a pleasure sort of having you here with us, and wishing you a good 2026. Stocks, by the way, as Sudipta was talking to us, has recovered about 10 rupees from the day's low and about 291 as we speak. We'll